One of my absolute favorite things about dividend growth ETFs like VYM, like SCHD, or even like DGRO, etc., is the fact that these ETFs over time have grown as far as price return goes, but also these ETFs have paid investors more and more in dividends over time, which if you reinvest those dividends along the way, can build a heck of a long-term dividend snowball, which can turn a relatively small portfolio over time over the years into a massive one. Now in this video, we're going to look into VYM, one of my favorite dividend growth style ETFs and arguably one of the best dividend growth ETFs across the entire market. We're going to talk about this ETF, what it has to offer, the previous returns of this ETF, and then later on I'm going to share with you how just $60,000 invested into VYM could potentially be more than enough when it comes down to retirement. And yes, you heard me right, just $60,000 could potentially be enough all on its own. So if you're a long-term dividend investor, you're definitely going to want to stick around for this one. Make sure to drop a like down below, subscribe, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So for those of you guys that aren't really super aware about VYM, VYM is the Vanguard high dividend yield ETF. It has a very cheap expense ratio of 0.06%, which means this ETF is going to give you exposure to some of the best dividend growth focused names, but all for very, very cheap. Now this ETF of course comes from Vanguard, and the product summary is seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. It also says it provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. Now, one of my favorite aspects about VYM personally is the actual portfolio breakdown, which I'm going to share with you in a second here, but also VYM offers a decent starting dividend yield, but on top of that gives you exposure to massive capital appreciation over time also. Now, to look into VYM's portfolio composition, this ETF has around 537 different stocks all in one fund. Now, that might be a little bit overkill for some investors out there. Some investors out there don't really feel as if it's necessary to have exposure to so many different names. But for me personally, as I'm getting older, I honestly like having more exposure than less in different areas of the market, because depending on what's going on throughout the market, you're going to see some areas do well, some areas do bad. And honestly, it feels like it kind of gives you a slow and steady road all the way up to the top. Now, the actual sector breakdown for VYM, basic materials is around 2.1%, consumer discretionary 10%, consumer staples around 11%, energy 9%, financials 20%, healthcare 11%, industrials 12%, technology 10%, telecommunications 4%, and utilities is around 7%. Now this right here is very important, especially if you're new to investing and if you're trying to choose which ETF you want to invest into. You're going to have to look through the actual breakdown of the sectors and the top holdings and things like that, because maybe you're not the largest fan of things like financials or other large parts of the pie like industrials. This is maybe going to give you a reason to not invest into something or to invest into something. But with VYM, it's sort of a boring, simple breakdown, but gives you a little bit of everything, which I like. Now, as far as the top holdings for VYM, again, a lot of companies that I would consider sort of boring. These companies are not going to be super flashy. They're probably not going to have any days in the market where they're up 20%, 30%, 40%. But every single name on this list, at least for the most part, has consistently went up into the right over time, which have offered capital appreciation, but also these names pay dividends and have also raised their dividends consistently over the years. And besides with VYM, although these do make up the majority of the ETF, these are the top 10, there's so many stocks in this ETF, it's almost hard to even keep track of. But the top names in VYM are things like Broadcom, JP Morgan, ExxonMobil, Procter & Gamble, we have Home Depot, Johnson & Johnson, Walmart, abbvie, we have Merck and Coca-Cola. Again, all super solid names, probably companies that will be around for a lot longer than you and I. Now, I sort of mentioned how VYM has the potential to grow over time as far as ETF price, but also over the years, this ETF has paid more and more in dividends too. But as far as capital appreciation goes, since around 2006, this ETF is up around 156%. And over the last 15 or so years, it's basically been trading up and to the right year after year after year. Now, for the investors out there that want exposure to income through dividends, but also do care about their net worth and want it to grow over time also, you're going to have to think about that and look at different ETFs that at least have the track record of doing so. Now, in the 1 year, VYM, along with pretty much everything in the market, has had a great year, 29%. Year to date, it's up 16%. And of course, this is because a lot of the top names in VYM have seen some love in the market over the last year. Now to get to the fun part, the dividends. The dividends for VYM are around 2.79% on the trailing 12-month dividend yield, which is not bad whatsoever, again, considering a lot of areas in the market are not offering much yield at all right now because everything is getting so frothy. Now, as far as dividend growth goes over the last trailing 12 months, 8.2%, the 3-year we got almost 7%, the 5-year almost 5%, and the longer term horizon we have almost 7% dividend growth rate. Now, this simply means that, just like I was saying earlier, over time for the most part, at least since around 2009, 2010, VYM has consistently paid investors more and more in cash flow, which is going to help especially smaller portfolios, a smaller amount of money invested, compound into a massive portfolio later on. Now, to get into the title of the video, I promise that a $60,000 investment into VYM could potentially be more than enough when it comes time to retire. Now, that sounds kind of crazy because I don't think you or I just off the top of our head think $60,000 is enough to completely retire with, but hear me out. So a $60,000 starting investment into VYM, which currently offers around 2.8%. Around a 6.82% expected annual dividend amount increase, around 6% annual share price appreciation. We also have a $1,200 annual contribution. You could take this out. You could, of course, add more. This is just adding $100 per month, though. The distribution is quarterly, DRIP is going to be turned on, so this portfolio is going to compound for 30 years. So let's say you're 20, let's say you're 30. This portfolio would basically be ready, so to speak, by the time you're 50 or 60 years old. Now, the way the math would work like this, your first year invested $60K would earn around $1,700 in dividends. After those dividends are reinvested, you're going to be at $66K, more or less by year number 2. Now, to not waste any time, by year number 10, we'd be at $140,000, which is substantial considering just 10 years ago you started with $60,000, and you're basically more or less just letting the portfolio compound. Now, 20 years down the road, we're talking $339,000, which is quite a bit of money, but not necessarily enough to completely retire off of yet. By the time you're at 25 years down the road, now the portfolio that started at $60,000 would now be worth over $500,000, which now that's substantial. Now, is $500,000 enough to retire at 40, 56 years old? But either way, it's impressive how an ETF like VYM has the potential to compound like this, or at least has historically. Now, all the way at the bottom, year number 30, this portfolio would have an ending balance at around $889,000, and this is after 30 years of compounding, growing the portfolio intrinsically, reinvesting the dividends along the way, dividend increases, etc. All in all, almost $900,000, which of course might or might not be enough for you to retire on, but I honestly think for the most part, it's a pretty good amount. So that, my friends, is exactly how just a $60,000 investment into something like VYM does have the potential to compound its way to a complete retirement package of around $900,000 if an investor dropped $60K into VYM, invested $1,200 more per year, and on top of that, reinvested dividends along the way. So now that we went through all that, I lastly have a question for you guys. As far as dividend growth ETFs, whether it's VYM, whether it's DGRO, or whether it's my personal favorite, SEHD, what's your number one favorite dividend growth ETF across the entire market as of right now? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.